Holy crap. Jerome Powell's press conference just ended, and damn, is he a superstar. I don't know anyone else that could ever get the markets this excited and optimistic about a potential cut in September when the markets were pricing a 100% chance of a cut in September. No, Fed Jerome Powell did not explicitly confirm a September cut, but he did sound very dovish or bullish, whatever terminology you want to use. So we will go over everything that Powell said today, the statement that was released at 2 p.m., and what could be coming next for markets. First and foremost, Jerome Powell says we have made no decisions about future meetings, including September, but he kept kind of saying this more like it was likely that September is the cut. He would stop himself from, saying that the next meeting's a cut and change his language at the last second before he outright just confirmed September. So no, he did not say September is when you're going to get the cut, but he almost said it a couple of times. And the markets are kind of reading through this and saying, yeah, September's when we're going to get that cut. Jerome Powell did explicitly say multiple times that a rate cut could be on the table in September. I will also note that he was asked if a 50 basis point rate cut was potentially on the table for September, and he basically said no. What I did find very interesting when he was asked about how many cuts we can expect this year, that the markets are pricing in 3 cuts and whether or not that is currently appropriate, Jerome Powell said, quote, "I can imagine a scenario of 0 cuts to several cuts this year, depending on how the economy evolves." And the markets took this and ran with it like crazy. As soon as he said this, it was off to the races. Jerome Powell said, "We don't think of the labor market as it is currently as a likely source of inflation pressures. That's why I don't want to see excess cooling in the labor market." So he basically said a couple times during the press conference, the inflation's not coming from the labor market, it's not coming from wages at this point. So we don't need to see cooling in the labor market, which is really just music to the market's ears. Powell also says if we see something that looks like a significant downturn in the labor market, then we would respond. And he did go on to say multiple times that the policy rate, really where it is, gives them a lot of flexibility to respond to any weakening in the labor market. Jerome Powell did say multiple times that they are in a good place. And he did again say multiple times, it's coming to the time to adjust rates to support our continued process. Now, Jerome Powell also addressed multiple times that there was actually a conversation that took place today about potentially cutting rates today. And this was the first time that has happened before where there was an actual discussion about the need to potentially cut rates at the current meeting. There has not been a discussion like that at any Fed meetings that we know of via the Fed minutes throughout this entire inflation cycle so far. So that did also get markets pretty excited. But as you can see, again, you are selling off into the end of the day. And I'll talk about why that is. And really, it's pretty simple. Yes, Powell was very dovish. He sounded great. Potentially multiple cuts this year. And it looks like we're going to get that cut in September as long as the data continues to come in good. But the Fed did not explicitly confirm a September cut. He did not declare victory on inflation, and he still is leaving it up to the data. So from the market's perspective, we have been expecting a cut in September. And yes, it sounds like we will get that cut in September. But again, we did not get that confirmation. Now, I will say the Russell is still up about 1.2% today at the time of recording this video. We still have about a half an hour left in the trading day or so. So, things can change on volatile days like today. But it's kind of like a stock that runs up into earnings. This market has run up into Jerome Powell. We got almost everything we wanted, but one thing we did not get, and that was explicit confirmation of September. Although you could read between the lines and say we almost did get confirmation of September. We did not. Okay, so it's a little bit of that sell the news reaction that is not uncommon to see on these Fed days or with major events. Now, in terms of where do we go next, again, it's back to the data. It's back to the labor report coming this Friday. It's back to big tech earnings today in after hours, and especially tomorrow in after hours when you get Apple and you get Amazon and other tech names that will report. Jerome Powell said, quote, "The job is not done on inflation, but can afford to begin to dial back restriction in the policy rate." Jerome Powell also says in a base case, you would think policy rates would move down from here. Jerome Powell also says we are now getting broader disinflation instead of just a couple of different areas. It's really now across the board disinflation. Now, traders following Jerome Powell see 70 basis points of Fed cuts this year, up from 64 basis points earlier. So this Fed meeting, again, although you did not get explicit confirmation of a September cut from Powell, the markets are now pricing in more cuts this year, and that did have a positive effect on markets. Jerome Powell was also asked about a 50 basis point cut potentially in September, and he said, again, that's not something we are thinking about right now. And again, Fed Jerome Powell says there was a real discussion about the case for reducing rates at this meeting, but the strong majority supported not moving rates at this meeting. So this implies there were more than one individuals on the FOMC committee. There's 19 of them that are voting members that did support cutting rates today, which I think that's another reason why markets were rallying so hard during Jerome Powell, because if multiple members are suggesting they should have cut rates today, then that's another strong sign of that September cut. Now, as you can see, yet again today, big tech is really benefiting from this, even more so than small caps. Apple is up 1.4, Meta is up 2.1%. They report earnings today and after hours. Amazon is up 3%, Google is up 0.5%, and Nvidia is up 12.5%. So you may see over the next couple of days a little bit more of a rotation back into big tech, potentially out of small caps, just because small caps have already priced in a September cut. We've already been expecting this for a while, and although it didn't get confirmed, it looks likely. It's just not any new information. Here you can see today's CNN Fear and Greed Index skyrocketed higher to 56, which is now in greed territory. Yesterday, you were in fear territory at 42. So you skipped past neutral today. You said neutral, went straight to greed. That's a wild move in just a one-day period. Part of this is because you are seeing a larger, broader based rally today, especially with the Russell, and specifically within the Russell. It's not just your leaders in the Russell that are doing well, it's a vast majority of all of your Russell stocks. So today you are seeing 5% of all stocks breaking above their 50-day moving average. You are now sitting at 72.05% of stocks that are currently above that 50-day moving average. These are very good numbers. So what is my conclusion about the Fed report and the Fed meeting today? And if you guys really want to see the Fed report, it's not what moved the markets. It really doesn't matter after Fed Jerome Powell started speaking. But basically, there was only a couple of changes. And on the inflation front, they said there has been some further progress towards the committee's 2% inflation objective instead of modest, which is the word that they used before. And in regards to the labor market, they say job gains have moderated, and the unemployment rate has moved up but remains low. The prior statement read job gains have remained strong, so they removed remain strong, and the unemployment rate has remained low. They took out remained low. So they're acknowledging the labor market is weakening, inflation is falling, but again, that's not what moved markets. What moved markets was Powell's statements, again, almost confirming a September cut, but not confirming a September cut. Basically, just making the markets, understand that they are still data dependent. The most likely step forward is a reduction in rates, but it depends on the the data on inflation and on the economy. If the economy weakens, then we'll get more cuts. If inflation falls faster than expected, we will get more cuts. That's what Fed Jerome Powell translated to markets today. And I think that's all bullish, and I think that's great. But specifically for small caps, you were pricing in so much good news that some people may look at this and say, it's a little bit of a disappointment. Whereas perhaps your Magnificent 6 or Super 7, whatever you want to, Mag 7, Super 6, whatever terminology you like to use, your mega cap tech has sold off recently. And I think that's why mega cap tech is doing a little bit better post Powell than the Russell. The Russell is giving up most of the gains, if not almost all of the gains you've seen from Powell today. And don't be surprised if we do get a continued sell the news event over the next coming days. This could mean a little bit more of a rotation again into some of your big tech stocks, at least temporarily. I do think you want to be in the Russell. I think there's a lot of reasons to be bullish on the Russell. Faster EPS growth than the S&P over the next 2-3+ years. You have low valuations in the Russell. Rates are going to be falling, and judging off of Powell today, he's very confident we will actually achieve that soft landing. All of these are things to be bullish on, but in terms of near-term expectations, we were pricing in a lot. We've rallied a lot. So for the next couple of days, it's possible that you could give some of that back, but I'm not expecting any kind of large downside for the Russell. So I would keep your expectations, kind of dialed back as far as downside as well, because I don't really think we got a reason for too much downside. And again, keep in mind the Russell is up 1%, but again, the Russell is falling more post Powell than the S&P and specifically your Mag 7. We do also have a fair bit of Tesla stock breaking news today that I think is also worth talking about here in this video. I will also share with you the option activity today as well as the short position in Tesla. Being reported that Mercedes will try and compete with the Tesla Model Y with a new battery powered crossover set to be introduced next year. Tesla's Diner and Supercharger gets a frame for a second movie screen. Ever since this news was announced that Tesla was creating a diner and movie theater supercharging station, I mean, this could be another venture for Tesla's core business. Because who doesn't love to eat? And who doesn't love a good movie? South Australia locks in federal funds to become the first grid in the world to reach 100% net wind and solar. And if I'm correct, they are partnered with Tesla for their Megapack batteries. Elon Musk confirms that AI-5 is 18 months away from high-volume production. Lawyers for Tesla will gather in a Delaware courtroom Friday to once more ask Chancellor Kathleen McCormick to approve Elon's 2018 CEO Performance-Based Compensation Award now that shareholders, including Vanguard, have given the go-ahead over objections from Musk's critics. Quote, now that Musk has the votes to ratify the grant, it will be much harder for the chancellor to say these shareholders were wrong, predicts Lawrence H. Hammermesh, a longtime Widener University Law School professor and a member of the Corporation Law Council that drafts updates of Delaware's nationally influential business statute. And apparently, according to Jalopnik, Tesla doesn't know how to sell cars to normal people. Yet the Model Y is the best-selling car in the world. Just put 2 and 2 together there. Even Elon Musk thought this was hilarious. Laugh reacting at this post. It's also being reported today that the European Commission has approved Blue Cruise for use on roads in that particular region. This means that the hands-free feature can now be used in a grand total of 17 countries, 15 of which are in the EU. Tesla just posted on their official X account that they have produced their 10 millionth drive unit across all of their factories. Here today, short interest of free float is sitting at 3.76%, which is largely unchanged. You have seen this fall a little bit from 3.82% down to where you are now at 3.76%, but in large numbers, shorts have not really done anything with their short positions. Neither have they added to them, nor have they covered on them. They're just in this kind of holding period. Now, with that said, you currently have $23.23 billion currently sold short in Tesla stock, totaling 104.37 million shares. Google Trends data for the Tesla lineup shows the Cybertruck at 63, the Model Y at 27, the Model 3 at 23, the Model S at 10, the Model X at 8. No, these numbers are not crazy high, but they are trending at very healthy levels. Nothing to suggest deliveries are on a, slow start for Q3. We do know via the news we got yesterday that Tesla China insured over 13,000 Teslas last week. That is the best week so far in Q3. So it looks like there is some continued momentum from Q2 as well now into Q3. Google Trends data for full self-driving shows a 19 number, which is still higher than where you used to trend, but back in more of a normal range. I do expect more promotional kind of activities around full self-driving could occur, potentially even another free trial coming soon, especially once you get a larger rollout of V12.5. Tesla's global inventory numbers are going up at least a little bit today to about 6,700 for the Model Y, the Model 3 to about 5,200, the Model X to 3,300, and the Model S to about 2,600. And beyond just the Fed that we got about an hour ago, the conference ended. You do have some earnings today in after hours with Meta, ARM, Qualcomm, Carvana, Lam Research, Western Digital, Riot, Jinko Eagle, Albemarle, and Paycom. Tomorrow's going to be another big day of earnings as well, with some notable names in pre-market, but the big guys tomorrow in after hours: Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, Marathon Digital, Booking Holdings, and Mercado Libre. And again, just beyond the Fed today, I think you're going to have a reaction to this over the next couple of days, but earnings can also have an impact on that reaction. And then as we head into Friday, we do have the non-farm payrolls as well as the unemployment rate, and specifically that unemployment rate is very important. That's what really the markets are going to be focused on, in my opinion, is that unemployment rate, because if you get another tick upwards, you're going to trigger the SOM rule. And usually when unemployment rises, it doesn't just go up in a, linear kind of stair step kind of way, right? It usually goes up a little bit and then really starts to explode when you go into a recession. So the higher the unemployment rate, the closer you are getting to a recession. And right now, there's really no recession risk baked into markets. So if recession risks start to rise, that can be a downside catalyst for markets. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys also want to come trade with us, check out that link down below in the description of this video as well. You guys have a fantastic rest of your day, and I will see you in the next one.